Seller financing is an option that more buyers and sellers are turning to in this high interest rate environment. With mortgage rates at their highest in years, traditional financing may feel out of reach for many buyers. So, if you are a homeowner struggling to get approved for a traditional mortgage, or a seller looking for more effective ways to close a deal, seller financing is a creative real estate strategy that might be the perfect solution for both sides. Hey everyone, welcome back to the channel. If you're new here, my name is Fana, and I'm a realtor specializing in helping people relocate to Las Vegas, as well as showcasing the incredible homes the city has to offer. If you want tips on buying, selling, and living in Las Vegas, make sure to hit that subscribe button. Now let's get started breaking down why seller financing can open doors for buyers and why it's a smart move for sellers to expand their buyer pool and close deals faster. First, I'll explain what seller financing is, and then get into how it can benefit both the buyer and the seller. So let's dive in. What is seller financing? In a seller financing deal, also called owner financing, the seller acts as the lender, allowing the buyer to make payments directly to them instead of securing a traditional mortgage. The seller receives payments over time rather than in a lump sum at the time of sale. Owner financing can attract buyers who may not qualify for traditional loans, making it easier and faster to sell the property. A bigger buyer pool can help you sell your home faster, with fewer buyers able to qualify for traditional loans. Offering seller financing could make your home stand out in a crowded market. Right now in Las Vegas, resale owners are having to compete with some pretty amazing builder incentives for new construction homes in the form of lower interest rates. Many are choosing new construction because of these lower rates, so a strategy like seller financing can bring potential buyers' attention back to considering a resale home. For buyers, it provides alternative financing options. For instance, if you're self-employed or have unique income streams, seller financing could be a way to avoid strict qualification requirements that banks may impose, making it difficult to get a loan. Also, for those who are well qualified to make monthly payments but have less than perfect credit from personal setbacks or life situations, it can be challenging to qualify for a loan. Buyers can avoid jumping through hoops with banks and mortgage companies and enter the real estate market without going through the extensive mortgage approval process, speeding up the transaction process for both parties. And buyers usually do not have to pay private mortgage insurance, otherwise known as PMI, which is one of the key benefits. PMI is typically required by traditional lenders when a buyer puts down less than 20% of the home's purchase price. With seller financing, all the terms of the loan are negotiable, including the down payment, the interest rate, and the length of the loan. With current interest rates being high, many buyers are hesitant to take on a traditional mortgage. Locking in a loan at, say, 6.5% could make monthly payments much steeper than they would have been a couple years ago. But with seller financing, buyers and sellers can negotiate a more favorable interest rate. For example, instead of that 6.5% rate from a bank, a seller might agree to a 5% rate. That could be the difference between the buyer being able to afford the property or not. It also means that the seller is making money on the interest payments throughout the term of the loan. It could benefit the seller to give the buyer a lower interest rate while increasing the purchase price, as taxes on interest income will be higher than the taxes on capital gains. This in turn also lowers the buyer's monthly payments, making it a better situation for both. This same negotiating scenario could also help the seller to avoid a loss if they don't have a lot of equity. They can give the buyer a lower interest rate while not having to lower the purchase price. Tax benefits for sellers and buyers. For sellers, spreading the income from the sale over time through installments may lower the capital gains taxes they owe in any given year. Seller financing allows the seller to spread out paying capital gains taxes over several years instead of paying it all up front, which can reduce the overall tax burden. Buyers will be able to enjoy the advantages of home ownership, which include tax deductions for mortgage interest. Of course, seller financing isn't without its risks. As a buyer, you'll need to make sure that the seller has clear title to the property, and as a seller, you'll want to thoroughly vet the buyer to ensure they can keep up with payments. And don't forget, you can still protect yourself by securing the property with a promissory note and mortgage, just like a traditional lender would. If the buyer stops paying, you can foreclose on the property. And it's always a good idea for both sides to work with a real estate attorney to draft an agreement so everyone is protected. That way, the terms are clear and there's no room for confusion down the road. If you're interested in exploring how seller financing can be a win-win option for you as a buyer or a seller in Las Vegas, give me a call. I'd love to help you navigate the process and find you the best option for your needs. Thanks for watching, and as always, don't forget to like this video, subscribe to the channel, and drop a comment below if you have any questions. Also, click on the link below to schedule a free consultation with me. See you on the next one soon.